The Medici Bank, it was like the ultimate influencer brand of its time, a name whispered with awe across Europe. From tiny Florence, they built an empire of money, art, and power. But even the biggest brands faced their epic fails. This wasn't some gentle slide into obscurity. This was a battle for survival, full of high-stakes gambles, broken promises, and shocking betrayals. They faced down royal defaults, papal wrath, and wars that threatened to tear their meticulously built world apart. It was a roller coaster of incredible highs and terrifying lows, where a single wrong move could mean absolute ruin. For decades, they danced on the edge, their fortunes hanging by a thread. Number 5, the shaky foundations of Milanese ambition. In the mid-1400s, Florence stood as a jewel of the Renaissance, its streets bustling with merchants and artists. The Medici Bank, under the shrewd eye of Cosimo de' Medici, was the pulsing heart of this prosperity. Its branches stretched like a network of financial arteries across Europe, from London to Bruges, Venice to Geneva, and most importantly to Milan. Milan, a powerful duchy to the north, was a key player in Italian politics, often a rival, sometimes an uneasy ally. Cosimo, with his quiet demeanor and sharp mind, understood that true power lay not just in wealth, but in influence, and that often meant backing the right horse in the tumultuous races of Italian states. Their horse in Milan was Francesco Sforza. Sforza was a condottiero, a mercenary captain of legendary skill and ambition. He was also a man who knew how to spend money, a lot of money. Sforza had his eyes fixed on the Duchy of Milan, a prize left vacant after the death of the last Visconti Duke, Filippo Maria. The ensuing scramble for power was a chaotic free-for-all, with Venice and Florence, among others, eyeing the rich territories. Sforza, originally employed by Milan, then by Venice, then for himself, was a master of shifting allegiances. Cosimo de' Medici saw in Sforza not just a military genius, but a potential stable ruler who could bring peace and order to Milan, which would be good for Florentine trade and Medici investments. It was a massive gamble, a deep dive into the unpredictable waters of dynastic succession and warfare. The Medici Bank began pouring vast sums into Sforza's campaigns. These were not just loans, but often subsidies, payments for troops, and even buying supplies. The relationship was built on trust, a handshake deal between two of the most powerful men in Italy. Sforza, a man of war, needed coin to pay his soldiers, maintain his equipment, and besiege cities. Cosimo, a man of finance, saw the strategic advantage of having a friendly, indebted ruler in Milan, a counterweight to their traditional rival, Venice. The bank's Milan branch, under the diligent management of figures like Pagello Portinari, found itself at the center of this whirlwind. Every dispatch from Milan spoke of escalating costs, of Sforza's insatiable need for funds to press his claim. The war dragged on, consuming more and more resources. It was a constant drain on the bank's capital. One particularly anxious moment arrived when Sforza was besieging Milan in 1449. The city was starving, but resistance was fierce. Sforza's own troops were growing restless, unpaid, and weary. Without fresh money, the siege could collapse, and with it all the Medici's investments. Cosimo received desperate letters, urgent pleas for more funds. The bank had already committed so much, and the risk was immense. If Sforza failed, not only would the money be lost, but Florence itself could face a more hostile Milanese ruler, jeopardizing its trade routes and political standing. It was a moment of deep anxiety for Cosimo, who had to weigh the immediate financial danger against the long-term geopolitical benefits. The strain was palpable. The partners in the other branches, especially those not directly benefiting from the Milanese situation, surely questioned the wisdom of such massive exposure. The bank's reputation, always a delicate thing, was on the line with every duke it advanced. Cosimo, with a remarkable display of strategic patience and unwavering commitment, continued to back Sforza. He knew that withdrawing support at a critical juncture would be catastrophic. The bank scraped together more funds, leveraging its vast network and its own personal wealth. The flow of money continued, a lifeline for Sforza's beleaguered forces. Finally, in February 1450, Milan surrendered to Sforza. He entered the city not as a conqueror, but as a deliverer, acclaimed by the people. He became Duke of Milan. This was a triumph, not just for Sforza, but for Cosimo de' Medici. The gamble had paid off, seemingly. The immediate financial crisis of constant wartime funding eased, and a new, friendly regime was established in a vital region. However, the financial burden did not simply vanish. Sforza, though now Duke, was still deeply indebted to the Medici. The transition from a warring condottiero to a ruling duke meant new expenses, building projects, court lavishness, and maintaining a standing army. The Medici Bank found itself in the position of being the primary financier of a new duchy. While Sforza was a loyal friend to Cosimo, the debt repayment was slow, often taking the form of future tax revenues or lucrative monopolies granted to Medici agents. This tied the bank even more deeply into the unpredictable political fortunes of Milan. Every time Sforza needed money for his government, for his new castle, for a fresh military venture, the Medici Bank was the first port of call. This long-term exposure, stretching over decades, became a slow but constant drain. The initial crisis of funding a war had morphed into the ongoing challenge of sustaining a grateful but financially demanding ally. The Milanese branch, under a series of managers including Portinari, struggled to balance the Duke's demands with the need for profitability. The relationship, though politically beneficial, meant a significant portion of the bank's capital was tied up in slow-moving, illiquid assets in Milan, reducing its flexibility elsewhere. It was a success that came with a very high, persistent cost. Number 4. The English royal debt disaster. The Medici Bank's branch in Bruges, in the flourishing lowlands of Flanders, was once a jewel in their crown. Bruges was a bustling port city, a hub of international trade, especially in wool and textiles. The Medici had established a strong presence there, facilitating trade, currency exchange, and lending to the powerful merchants and even the nobility. For years, the Bruges branch thrived, bringing significant profits back to Florence. Its manager, a series of capable Florentines, ensured the smooth flow of business, handling vast sums and complex transactions. However, the political landscape of England, a vital trading partner for Bruges, was a constant source of turbulence. The Wars of the Roses, a brutal civil war between the houses of Lancaster and York, raged for decades. The kings rose and fell with alarming speed, and each new ruler needed funds to prosecute their campaigns, secure their power, and maintain their court. The Medici Bank, always eager to lend to sovereigns for the prestige and potential profit, found itself increasingly entangled in English royal finances. They lent to Edward IV, the Yorkist king, who eventually emerged victorious from the bloody conflict. Edward, though triumphant, inherited a kingdom deeply divided and perpetually short of cash. He needed money for everything, from governing to maintaining his army and his lavish lifestyle. The Medici, through their Bruges branch, extended significant loans to the English crown, secured by various promises of future customs, revenues, or wool exports. The problem was that promises from a warring king often turned out to be as flimsy as parchment in a downpour. Edward IV was not always the most reliable debtor. As the 1470s progressed, the financial situation in England, despite Edward's nominal victory, remained precarious. His treasury was often bare, and his attention was frequently diverted by internal strife or renewed military preparations. The Medici loan portfolio to the English crown grew larger and larger. The bank managers in Bruges, under pressure from Florence to secure new business and maintain political connections, found themselves increasingly exposed. Angelo Tani, an early manager, had been cautious. But later, Tommaso Portinari, a man of ambition and less restraint, took over. Portinari, perhaps dazzled by the prestige of lending to a king, or perhaps just too eager to please Lorenzo de' Medici back home, began extending even more credit, often without sufficient security. He saw the potential for huge returns, but underestimated the king's willingness or ability to repay. The crisis truly began when Edward IV defaulted on a significant portion of his debt. It wasn't a sudden, dramatic announcement, but a slow, painful process of missed payments, renegotiated terms, and outright non-payment. The English crown, always prioritizing its own immediate needs, simply ceased to honor its obligations fully. This was a catastrophic blow to the Bruges branch. A huge sum of money, representing a substantial portion of the branch's capital, and indeed a significant part of the entire Medici bank's assets, was now locked up, potentially lost. The precise amount is hard to pin down, but historical sources suggest it was an enormous sum, perhaps tens of thousands of ducats. For perspective, a skilled craftsman might earn a few dozen ducats in a year. This was enough money to build several palaces. The immediate fallout was immense. The Bruges branch faced a liquidity crisis. It had advanced so much money to the English king that it did not have enough cash to meet its own obligations to depositors and other merchants. The rumors spread like wildfire through the merchant community of Bruges. When a bank cannot pay its debts, its reputation is shattered, and panic can quickly set in. Other merchants who had deposited funds with the Medici or relied on their bills of exchange began to demand their money back. The branch manager Tommaso Portinari sent increasingly frantic dispatches to Florence detailing the catastrophe. The central bank in Florence under Lorenzo the Magnificent had to make difficult decisions. They could not allow a major branch to collapse entirely, as that would damage the reputation of the entire Medici enterprise. They had to inject capital, sending funds from other, more profitable branches, draining their overall reserves. The long-term consequences of the English default were devastating for the Medici Bank. While they managed to stave off outright collapse of the Bruges branch through infusions of capital, the situation never truly recovered. A huge chunk of their capital was essentially written off as a bad debt. The English crown, even after Edward IV, remained a difficult and unreliable debtor. The losses forced a significant scaling back of operations in Bruges. The city itself was also losing some of its prominence as a financial center, with Antwerp rising. The combination of royal default and the mismanagement of Portinari, who was more interested in grand gestures than sound financial practice, crippled what was once a very profitable operation. The Bruges branch became a persistent drain rather than a source of income. It cast a long shadow over the Medici's lending practices and highlighted the extreme risks of extending large, unsecured loans to powerful but unreliable rulers. The initial glittering promise of prestige and profit from royal patronage had dissolved into a stark lesson in sovereign risk and the perils of excessive exposure. It marked a significant turning point, showing the vulnerability of even the most powerful bank to the whims of unpredictable monarchs. Number 3. The Pope's wrath and the Pazzi conspiracy's aftermath. The Medici bank's relationship with the papacy was one of its most vital and complicated connections. For decades, the bank had served as the primary financial agent for the popes, collecting revenues from across Christendom, handling vast sums, and extending loans to the Holy See. This gave the Medici immense prestige and influence, not just in Italy, but across Europe. It provided them with access to valuable intelligence and opened doors to lucrative business opportunities. Pope Sixtus IV, who ascended to the papacy in 1471, was a man of immense ambition, determined to aggrandize his family, the Della Rovere, and expand the temporal power of the Papal States. This meant wars, building projects, and lavish expenses, all of which required vast sums of money. Initially, the Medici Bank continued its role as the Pope's main financial arm. However, the relationship began to sour. Sixtus IV, in his drive to create new principalities for his nephews, became increasingly aggressive. He eyed Imola and Forli, territories traditionally within Florentine influence, and sought to buy them. Lorenzo de' Medici, now at the helm of the family and the bank, resisted lending the Pope the money for these purchases. Lorenzo, a masterful diplomat and a fierce protector of Florentine independence, saw Sixtus's ambitions as a direct threat to Florence's security and its position in the delicate balance of Italian power. The refusal to lend money for these specific acquisitions was a major point of contention. Sixtus IV, furious at Lorenzo's defiance, retaliated. He stripped the Medici Bank of its lucrative papal accounts, transferring them to their rivals, the Pazzi Bank of Florence. This was a devastating blow, not just financially, but to the Medici's prestige. The papal accounts were enormous, and the fees and commissions associated with them were a steady stream of income. Losing them to a Florentine competitor was a public humiliation. The Pazzi family, another powerful Florentine banking house, harbored a deep-seated resentment towards the Medici, envying their unparalleled influence and control over Florence. The Pope's patronage emboldened the Pazzi and intensified their rivalry. The simmering animosity exploded on April 26, 1478, in what became known as the Pazzi conspiracy. During High Mass in Florence Cathedral, assassins organized by the Pazzi family with the tacit support of Sixtus IV and his nephew Girolamo Riario attacked Lorenzo and his brother Giuliano de Medici. Giuliano was brutally murdered, stabbed 19 times. Lorenzo, though wounded, managed to escape with his life. The conspiracy was an attempt to overthrow Medici rule in Florence, orchestrated by rivals and backed by a pope who saw the Medici as obstacles to his power. The people of Florence, however, rallied fiercely behind Lorenzo, turning on the conspirators with a terrifying fury. The Pazzi family was hunted down, their leaders hanged from the windows of the Palazzo della Signoria. Archbishop Salviati, implicated in the plot, was also summarily executed. The Pope's reaction to the failure of the conspiracy and the execution of his allies was swift and severe. He immediately placed Florence under an interdict, a spiritual censure that forbade all religious services in the city. This was a catastrophic blow to a deeply religious society, implying that its people were damned. More critically, Sixtus IV formed an alliance with King Ferrante of Naples and declared war on Florence. This was not just a diplomatic spat or a financial dispute. This was an existential threat. The Medici Bank, instead of profiting from the papacy, found itself at the heart of financing Florence's defense against a powerful coalition led by the very Pope, who had once been its most important client. The financial strain was immense. Florence needed to raise vast armies, pay mercenaries, and secure its borders. Lorenzo, who effectively controlled the Florentine government, turned to the Medici Bank. The bank became the primary financier of the war effort, extending huge loans to the Florentine state. This meant diverting capital away from profitable ventures, reducing liquidity, and taking on massive risk. The war dragged on for 2 years, draining the bank's reserves. Every ducat sent to pay soldiers was a ducat that could not be invested in trade or repaid by reliable debtors. The war was crippling the Florentine economy, which in turn hurt the bank's merchant clients and their ability to repay loans. The interdict also damaged trade, making it harder for Florentine merchants to conduct business across Europe. And Lorenzo, realizing the dire straits Florence was in, decided on a bold, almost desperate gamble. In late 1479, he secretly sailed to Naples, putting himself at the mercy of King Ferrante, his sworn enemy. It was a diplomatic mission of extraordinary personal risk, aimed at breaking the alliance against Florence. After several tense weeks of negotiation, Lorenzo's charm, intelligence, and diplomatic skill prevailed. He convinced Ferrante to withdraw from the alliance. This unexpected peace deal shattered the papal coalition and left Sixtus IV isolated. The war ended in 1480. The immediate crisis of war and interdict was over, but the long-term damage to the Medici Bank was profound. The papal account was never fully recovered. The immense sums advanced to the Florentine state during the war were slow to be repaid, if at all. Many of these loans were effectively absorbed by the state, becoming political rather than commercial debts. The bank's liquidity was severely compromised, and its capital eroded. The Pazzi conspiracy and its aftermath forced the Medici Bank to shift its focus from international banking to directly supporting the Florentine state and Lorenzo's political agenda. It became less of a purely commercial enterprise and more of a state treasury. This fundamental change in its business model made it less adaptable and more vulnerable to political upheaval. The bank survived, but it emerged from this crisis profoundly weakened, its reputation dented, its resources depleted, and its future direction irrevocably altered. Number 2, the Salt War and Papal predation. Even before the cataclysm of the Pazzi conspiracy and its devastating war, the Medici Bank found itself ensnared in another major financial quagmire with Pope Sixtus IV. This earlier conflict, known as the War of Ferrara, or the Salt War, erupted in 1482, less than 2 years after the conclusion of the Pazzi War. It involved many of the same key players, but with shifting alliances, making the political and financial landscape even more treacherous for the Medici. Sixtus IV, never one to give up on his ambitions for his Della Rovere nephews, decided to target Ferrara, a strategically important duchy. His pretext was a dispute over salt production, a hugely profitable monopoly, but his real aim was to seize territory for his nephew Girolamo Riario. To achieve this, Sixtus allied with Venice, a powerful maritime republic that also coveted Ferrara. Florence, under Lorenzo de' Medici, found itself on the opposing side, allied with Naples, Milan, and Ferrara itself. This meant that once again the Medici Bank was pitted against the very Pope who had once been its most important client. The situation was fraught with irony and danger. The bank had already suffered massive losses during the Pazzi War, its capital reserves significantly depleted from financing Florence's defense. Now, barely recovered, it was asked to fund yet another war, this time against a pope who was explicitly hostile and a powerful Venice. The demands on the Medici Bank were immediate and enormous. Financing a war meant huge expenses, paying mercenary captains, equipping soldiers, provisioning armies, and fortifying towns. The Florentine state, though economically vibrant, did not possess a standing treasury capable of funding prolonged warfare without substantial loans. The Medici Bank, despite its previous losses, was still the largest and most capable financial institution in Florence, and indeed in much of Italy. Lorenzo, as the de facto ruler of Florence, had no choice but to rely heavily on the family bank. This was not a commercial decision driven by profit potential, but a political necessity for the survival of the Florentine state. The bank found itself having to advance vast sums to the Florentine government. These were not short-term loans, but long-term commitments that tied up significant portions of the bank's remaining liquid capital. Imagine the strain on the branch managers trying to balance their books while knowing that immense sums were being siphoned off for unpredictable military campaigns. Bills of exchange, typically used for trade, were now being employed to move funds for troop payments across battle lines. The very structure of the bank, designed for commerce, was being stretched and distorted by the demands of war. The war dragged on for 2 years, and the financial bleeding continued. The Pope, meanwhile, was also in dire need of funds, and his own financial situation, despite his new bankers, was precarious. He was still accumulating debts, and many of these debts were owed to other banking houses, some of whom were also Medici rivals. This created an intricate web of financial and political leverage, with each side trying to outmaneuver the other, not just on the battlefield but also in the counting houses of Europe. A particularly insidious aspect of this crisis was the Pope's continued political and financial predation. Sixtus IV, as head of the Church, held immense spiritual power, which he frequently used as a weapon. He had previously excommunicated Lorenzo. Now, he used his authority to target not just Florence, but also the Medici Bank's international operations. Papal legates, agents of the Pope, were dispatched to various European courts, urging rulers to seize Medici assets and to refuse to deal with the Florentine bank. This was an attempt to cripple the Medici financially by disrupting their international network, forcing them to liquidate assets and damaging their reputation as reliable financiers. While not all rulers complied, the threat was real, and it made conducting business incredibly difficult and risky. The bank's reputation, which was its lifeblood, was under constant attack from the highest spiritual authority in Europe. The strain of the Salt War ultimately forced the Medici Bank into deeper financial woes. The sheer volume of non-performing loans to the Florentine state, combined with the difficulty of conducting international business under papal censure, further eroded its capital and liquidity. The bank had to prioritize state solvency over its own profitability. This meant that the bank became a de facto branch of the Florentine treasury rather than an independent commercial enterprise. Its ability to invest in new ventures, to support its profitable branches, and to take advantage of new trade opportunities was severely curtailed. The focus was entirely on survival. The Salt War ended in 1484 with the Peace of Bagnolo. It was a complex settlement without a clear victor, but it did bring a temporary end to hostilities. The immediate crisis of war financing subsided, but the long-term impact on the Medici Bank was dire. It was another heavy blow coming so soon after the Pazzi War. The successive wars had left the bank severely weakened, financially exhausted, and increasingly dependent on the political fortunes of Florence. Its commercial viability was shrinking, replaced by a role as a political instrument. The once robust and diversified bank was now a shadow of its former self, its capital depleted, and its business model dangerously concentrated on supporting a frequently warring state. The experience taught the Medici that even the strongest relationships, like the one they once had with the papacy, could turn into sources of immense financial and existential danger. Number 1. The weight of empire and Lorenzo's final struggles. By the late 1480s, the Medici Bank, though still an imposing name, was a shadow of its former glory. Lorenzo de' Medici, known as the Magnificent, had successfully navigated the treacherous waters of Italian politics, cementing Florence's position as a key player and maintaining a fragile peace. He was a statesman of unparalleled skill, an avid patron of the arts, and a shrewd diplomat. However, his focus had increasingly shifted from the counting house to the political arena. He devoted less attention to the day-to-day operations of the bank, delegating more authority to managers who often lacked the sharp financial acumen of earlier generations. This shift in focus coincided with a general decline in the bank's profitability and financial health. The cumulative effect of the previous crises had taken its toll. The enormous losses from the English default, the vast sums absorbed by the Florentine state during the Pazzi War and the Salt War, and the loss of the lucrative papal accounts had severely depleted the bank's capital. Many of the loans made during wartime were effectively irrecoverable or repaid at a glacial pace, leaving the bank illiquid. Money that should have been generating new profits was tied up in bad debts or slow-moving government bonds. The bank's branches, once beacons of profitability, were struggling. Bruges had become a perpetual drain. The Rome branch, though it regained some papal business under Pope Innocent VIII, never fully recovered its dominant position. The Milan branch continued to be weighed down by the Sforza debt. The Lyon branch faced increasing competition. The careful management of the early Medici, who prioritized liquidity and spread risk, had given way to a more centralized and less disciplined approach, driven by Lorenzo's political needs rather than strict commercial principles. The family's personal wealth, the state's finances, and the bank's capital began to blur dangerously. Funds were often diverted from the bank to support Lorenzo's lavish court, his artistic patronage, or to cover the state's expenses, blurring the lines between private and public funds. The final, grinding crisis for the Medici Bank came from the slow, relentless erosion of its capital and the changing nature of its business. It was not a single, dramatic event like a default or a war, but a prolonged period of decline exacerbated by poor management and the inherent risks of a family bank now intertwined with the state. Lorenzo, despite his brilliance in politics, was simply not the banker his grandfather Cosimo had been. He was more interested in art and diplomacy than in ledger books and interest rates. This lack of direct oversight allowed problems to fester. One particularly telling example of this ongoing struggle was the bank's increasingly risky investments. To try and recoup losses and generate revenue, the bank sometimes engaged in more speculative ventures, including large-scale commercial operations that required significant capital tied up for long periods rather than quick, liquid loans. There were also instances of questionable accounting practices designed to hide losses and maintain the illusion of solvency. Managers, eager to please Lorenzo, might have been reluctant to report the full extent of the financial difficulties. This created a dangerous feedback loop where problems were masked, preventing timely intervention. As Lorenzo's health declined in the early 1490s, so too did the bank's ability to manage its myriad issues. The structure of the bank, with its various partnerships for each branch, meant that when one branch failed, it put pressure on the central bank in Florence and other partners. There was less oversight, more internal disputes, and a growing lack of trust among the partners. The bank's reputation, once unassailable, was now tarnished by rumors of insolvency and internal strife. Creditors began to grow wary, and the flow of new deposits slowed. Lorenzo died in April 1492, leaving his eldest son Piero to inherit both the political leadership of Florence and the crumbling financial empire of the Medici Bank. Piero, known as Piero the Unfortunate, lacked his father's diplomatic skill and his grandfather's financial genius. He inherited a bank that was functionally insolvent, held together largely by the prestige of the Medici name and the illusion of its power. The bank had been bled dry by decades of political entanglement and financial mismanagement. It had become a treasury for the state and a personal purse for the ruling family, rather than a self-sustaining commercial entity. The ultimate test for the Medici Bank came with Lorenzo's death. Without his political genius to sustain it, the bank's true financial fragility became starkly apparent. 2 years later, in 1494, when King Charles VIII of France invaded Italy and entered Florence, Piero de' Medici's disastrous handling of the crisis led to the family's expulsion from the city. The Medici palaces were looted, and the bank's remaining assets were seized or dispersed. The once mighty Medici Bank, which had survived decades of royal defaults, papal wars, and internal strife, finally collapsed, not from a single, sudden blow, but from the cumulative weight of overextension, political entanglement, and the slow, internal decay of its financial foundations. Its demise marked the end of an era, a stark reminder that even the most powerful institutions can be undone by persistent strain and a shifting tide.